This program is for informational and educational purposes only. This program is not a solicitation or recommendation for any investment or security. Investments or securities mentioned in this show may or may not be owned by Nepsis Advisor Services. Nepsis Advisor Services is an SEC-registered investment advisor. Thank you for joining Journeys with Joni, Financial Clarity Conversations, today and every Wednesday on Sunny 1450 and 1320.
Welcome to Journeys with Joni. My name's Joni Rametta, and I'm here today with my co-host, Mark Clark. Mark, how are you?
I'm having a blast today, Joni. How are you?
I'm good. Thank you for joining us today. Last week we had a great show. We talked to Lindy Wickerson. She's a CPA down in Venice. I think we had quite a few little conversations that were, very heartwarming, talking about Obamacare or the Affordable Care Act, Social Security. We talked about spouses passing and taxes and catching up with the things that we need to do. We've got a seminar or a workshop, we're calling it, tomorrow, February 6th, 5:30 p.m. at our offices. You can join us there to continue the conversation with Lindy and myself about the different things that we talked about last week. You can find us at www.journeyswithjoni.com, or you can give my office a call, 941-361-1484.
They're going to get a great opportunity if they come to that workshop to meet and talk with Lindy and Joni. It's going to be a good time.
I think it'll be really good. I think we have a few things planned to discuss, get conversations going. But, one of the best things about our workshops is we always have that question and answer period.
Yeah, it's a lot of fun. You're not going to be sold anything. You're just going to be given a great opportunity to interact and meet Joni and Lindy and have a good time.
So, Joni Rametta, who am I? Well,
who are you?
I don't know. Some days I wonder. I'm a financial planner, and I am a registered investment advisor at Nepsis Advisor Services. We're located at 6230 University Parkway, Suite 305. And the firm name is Nepsis. And I know a couple of times, Mark, you and I have talked about the word Nepsis on the show. And let's give our audience, just in case we've got some new people listening, what does Nepsis mean?
People always wonder where in the world we got the word Nepsis, and it is Nepsis. And Nepsis is a Greek word that means to be watchful and vigilant, to have a clear and sober mind coming out of a state of catharsis. And then they go, well, what do you mean by that? Well, what we really mean is we want you to invest with clarity. Our whole goal as we work with people, and, we had a great show last week with Lindy about taxes can be a just daunting, overwhelming, emotional event, that comes up every April 15th. But the fact of the matter is it goes all the way throughout the year, and it's a plan and it's a process. Well, so are investments. And, we talk to people so many times that, in fact, I talked to a gentleman who is probably not a good fit for our firm, and his comment was, on December 31st, I look at the returns of my portfolio, and if they're green, if I made money, I'm happy. If they're red and I lost money, I'm not happy. Well, whoever said we need to check and measure our performance on December 31st? And, investing with clarity, it's more important about the journey than the immediate result. You hear everybody talking about, I want to buy something today and I want it to go up. Well, we all want to win the lottery. And, when you don't win the big, huge lottery, you go start buying scratch-offs just to try to win a $500 bill or something like that. So,
and most of the time when I buy something, where it goes tomorrow? It goes down. It
does. It does go down. So Nepsis, being the whole mantra of what we do is investing with clarity. What is our philosophy? Well, our philosophy is to own good companies. We want to own those good companies over time. And we talked about the philosophy in depth a couple weeks ago before Lindy was on the show. And we talked tax last week. But we talked about that. And the philosophy of knowing what you own and why you own it is a key. And over the past couple of weeks, Joni, we've had some people we've done some portfolio analysis for. And we have a tool where we simply, you ever heard of this thing called Morningstar? It's a very popular tool out there. We put the portfolio in Morningstar, and we discover how many holdings, how many companies that most people have in their portfolio. And people are shocked at how many different stocks or companies that they have. You've seen that happen a lot.
Oh, yeah. Well, because most of the time people look at their statements and sometimes it just has, 10 or 12 names on it, but those names are actually mutual funds or ETFs or something like that actually have names within those names. And what do we find? We find 1,200 names in that portfolio.
Yeah, the last one we did, we looked at, the guy had 5 what he called investments, and they were really mutual funds. And a mutual fund is a way of holding investments. So when we took the mutual funds apart and found the underlying holdings, the top 500 companies that he had in his portfolio made up 38.9%. That means mathematically, and oh, by the way, the 500th company was 0.001% of his total portfolio. So this guy had over 1,500 companies in his portfolio. That's a lot.
And he didn't even know what the name of those companies were, did he?
No, he had no idea.
No idea.
Studies show us that when you have more than 40 holdings in your portfolio, you don't get any additional value from the additional diversification. But we're not here to talk about the philosophy today. We're really going to talk about the strategy. But before we do that, it is important to know that at Nepsis we have 4 key components to our investing. We have a game plan. It's football season. We just wrapped up the football year. But at the end of the day, the winning coach always has the best game plan and executes the game plan in the most efficient way. So if you don't have a plan, I've heard this saying, you plan to fail when you fail to plan. So you want to make sure I want to make sure I say that right. Mm-hmm. I get that one backwards sometimes. But we have 4 key components. We have our philosophy, which we talked about. We have our strategy. How do we implement that philosophy? We're going to talk about that in depth today. Then we have flexibility and transparency. 2 of the most key components are flexibility and transparency. And I know we're going to have some workshops coming up. They can check back on our website. We launched a new website a couple weeks ago.
We did. It's exciting, isn't it?
It is.
www.journeyswithjoni.com.
It's a great place to connect with us. Not a lot of content on this landing page that we have, but it's a connection to Joni and the things that we're doing in the office to make an impact. You can find a connection to Lindy if you missed the show last week talking about taxes. But we're going to talk more in the future about investing with clarity at future workshops. But the strategy of how we do what we do is what we're going to talk about today. So we have a workshop coming up tomorrow. You want to tell us about that? I know we're coming up on a break before we get deep into strategy.
Yeah, the workshop tomorrow, February 6th at 5:30. It will be with myself, Mark, and Lindy Wickerson, CPA from Venice, and we'll be talking about taxes and answering some of your questions. So after the break, we'll be right back and we'll talk a little bit about investing with Nepsis Advisor Services and the term strategies.
Are there too many bumps in the road in your financial experiences? It's time to get off that road and visit with Nepsis Advisor Services. Our next workshop discussing investing with clarity is an opportunity to meet Joni and Mark. Join us on January 23rd at 5:30 p.m. Please call 941-361-1484 today to reserve your seat. Call 941-361-1484 today. We look forward to meeting you. Do you know what you own and why you own it? Join us for our next workshop to learn about investing with clarity by calling 941-361-1484 to reserve your seat today. Joni and Mark look forward to discussing the philosophy, strategy, flexibility, and transparency, the 4 pillars of investing with Nepsis Advisor Services. Call today, 941-361-1484. That's 941-361-1484.
Welcome back to Journeys with Joni. Just before the break, Mark and I were discussing, first of all, we were discussing the workshop tomorrow on taxes.
Yeah, don't forget the workshop.
Yeah, let's not miss the workshop. Tomorrow, 5:30, give us a call, 941-361-1484. We still have room, so RSVP to us right away. But before the break, we were talking about the 4 key components with involved. The 4 key components to investing that we believe are important are philosophy, strategy, flexibility, and transparency. And last time we talked about philosophy. And our philosophy is you own 25 to 35 names, and that you know what you own and why you own it. So that segues now into strategy. So Mark, client comes in with a portfolio or some cash, what's the strategy that we use to invest those funds?
Great question. People love our strategy. And the reason they love it, well, they love the whole story, is because they can understand it. I was giving this presentation in Texas and with a group of advisors out there and a bunch of clients in the room. And this old Texan gentleman at the end of the workshop raised his hand. He says, I really like this Nepsis stuff. He goes, this is the way I felt money should be managed all my life, and I've never seen anybody manage it this way. I'm in. It was kind of funny. It was one of those moments where you go, aha. But it just comes back to the fact that people understand what we do. So you did mention the fact that you know what we own and why we own it. Well, that's true. We own companies. We own stocks. We don't like the stock market either. The stock market's going to go up and going to go down. I think we talked about that guarantee. That's the only guarantee we can make in our business. But how do we do that? How do we deploy that? Well, we own 25 to 35 companies. And, Lindy was on the show. She has a couple kids. Joni, you're a mom. Lindy's a mom. I'm married, 3 daughters. When do people like to go shopping?
Oh, like Black Friday?
When things are on sale. Exactly. Well, my lovely wife likes to go shopping all the time. Not really. But people love to go when things are on sale. So just because you bring us your portfolio today and we say we want to own 25 to 35 companies, how do we do it? We strategic cost average into the companies we want you to own over time. What do I mean by that? How do we do that? When you bring your portfolio to us, either in check form or you're going to transition it over, we don't just liquidate and sell the holdings that you have just for the sake of selling it, because you have some components in there. We talked about tax loss harvesting and tax planning last week with Lindy on the show. There could be a tax implication in your portfolio just to blindly sell things for the sake of selling them. Even though they might not be an investment we want to hold, you've got to have some strategy in why you're selling it and how you're doing it. And then on the flip side, I go back to our joke here about when do you like to go shopping when things are on sale. Just because we own 25 to 35 companies, for you, the individual investor that brings your account over to us, doesn't mean that those companies that we want you to own are in a buy segment or they're on sale. They may be too expensive. Yes, we may want to own them, but they may be too expensive. So that's a component of the strategy. We'll never put any more than 5% of your total portfolio in any one position as we initiate that position in the portfolio. That doesn't mean that the holding may not grow greater than 5%, but when we're initiating the transition of the portfolio over to us. So that is one of the keys. And one of the other things that we're talking in our community here in the central west coast of Florida, we have a lot of seniors, and you've had a lot of seniors ask you questions, Joni, about I'm not earning money anymore. I'm not putting any more money into the portfolio. How does this interact? You've had those questions, haven't you?
Oh, absolutely, because you're talking about strategic cost averaging. So when you're doing that, sometimes you're adding cash to the portfolio that now the portfolio manager is going to invest. But what happens if I'm not adding money? What if the account's staying the same size that it is because I'm retired and I'm playing golf?
We hear that a lot because the people that are retired playing golf, doing the things that they've wanted to do all their life, that they've worked hard to do, they're saying, well, I like what y'all are saying on the radio, but it doesn't pertain to me because I'm not earning income. Well, your portfolio is a living, breathing entity, and it will forever be changing. There are a couple of things that go into the opportunity to continue to grow the portfolio. We've talked about strategic cost averaging. We talked earlier, a couple shows back before Lindy, the philosophy. We love dividend-paying companies, and just because a company pays a dividend on their stock doesn't mean that their stock price is at a point where we want to purchase it. So why should we reinvest the dividend into the company that paid the dividend, regardless of what the price is? We'll take those dividends and we'll redeploy those dividends into the companies that are on sale. So that's one of the cool things that work in our favor. Dividends are forever coming into the portfolio, so it's called free cash flow. One of the other things that creates free cash flow in the portfolio is one of our sell disciplines. I'm not going to get into the sell disciplines a lot today, but when we find that we are going to sell one of the companies for any one reason that we're going to sell, that creates free cash flow as well that we need to redeploy back into the portfolio. So portfolio rebalancing is a constant tool that goes into effect. So strategic cost averaging, we had another way to really describe this, and it was the penny jar, the penny jar theory. Tell us about the penny jar theory, Joni.
Well, the penny jar, just think about it. All of us have a container someplace in our house that, you throw your odd change in. You just throw the pennies in every day as you walk by. 7 days a week, 365 days a year. And what happens at the end of the year?
Well, if your teenager hasn't found it.
Yeah, hopefully your teenager hasn't found it. Or maybe your teenager's adding to it. But at the end of the year, you've got a bucket of money. And if you count that money, you might be able to pay for something that you weren't looking for to save for. Maybe a vacation, maybe just dinner. Maybe it's a little bit, maybe it's a lot, but you're saving money.
It's kind of like you found the money in your pocket today that you forgot was in your pocket, right?
I did.
Anybody ever had that happen? And no matter whether it's $1 or $20, it's a win. You're sitting there going, wow, I found more money that I didn't plan on. And that's really what happens in the penny jar theory over time as we strategic cost average into the companies in the portfolio that we want to own. Before you know it, you've got a long-term return, not a short-term windfall. We're not looking for the short term. We're not fundamental analysts. We don't look for day trading. That's not what we're doing. We're looking to buy companies over time. We're not market timers. And, it'll be a great opportunity for folks. I know we got a tax workshop coming up tomorrow evening, but we can also talk investing a little bit as it pertains to taxes. And I know we're up against a break again here. So where's our workshop and how can people sign up?
That tax workshop is tomorrow, February 6th at 5:30. Give us a call at 941-361-1484 or visit us on the web, www.journeyswithjoni.com. We'll be right back.
Are there too many bumps in the road in your financial experiences? It's time to get off that road and visit with Nepsis Advisor Services. Our next workshop discussing investing with clarity is an opportunity to meet Joni and Mark. Join us on January 23rd at 5:30 p.m. Please call 941-361-1484 today to reserve your seat. Call 941-361-1484 today. We look forward to meeting you. Do you know what you own and why you own it? Join us for our next workshop to learn about investing with clarity by calling 941-361-1484 to reserve your seat today. Joni and Mark look forward to discussing the philosophy, strategy, flexibility, and transparency, the 4 pillars of investing with Nepsis Advisor Services. Call today, 941-361-1484. That's 941-361-1484.
Welcome back to Journeys with Joni. This is Joni Rametta and my co-host, Mark Clark. We're back here. We were discussing some different topics, winding up today's session and talking about strategy. But before we go back into talking about that, I want to refer everybody to our website, www.journeyswithjoni.com. If you go there, it's a landing page. It will take you to the different workshops that we have going on. We have some planned in the future, so we'll update that probably much faster than we'll tell you on the radio. You can go there to register. You can go there to reach out to connect with either myself, with Mark, or with Lindy from last week when we were discussing taxes. So tomorrow, workshop is at 5:30, taxes with Lindy, Mark, and Joni. Give us a call at 941-361-1484. We look forward to seeing you and meeting you then.
Yeah, don't miss this opportunity. It's tax season, and we have twisted Lindy's arm to come out during tax season and do a workshop with us. So before you file your taxes, or even if you have, and you're looking for a question to be answered or a new opinion, a new idea, especially as you go into 2014. We talked last week with Joni, or with Lindy, you're Joni, with Lindy about the CPAs are most of the time stuck in a reactive mindset because people bring them their stuff. So be proactive. Come visit us. Come sit down with us and join us on the workshop. You're not going to be sold anything. We're just going to have a good time, just like we're doing here on the radio.
All right, Mark, thank you. And you know what? Just before the break, we were talking about, you brought up a term called strategic cost averaging. And most people are familiar with the word, well, what was that word?
Dollar cost averaging.
Dollar cost averaging. Yeah, so dollar cost averaging is not strategic cost averaging, correct?
No, it's not. It's a great point. One of the things that those of us in this industry tend to do is we assume people know what we're talking about, and we use all the industry jargon, and
Yeah, we're all guilty of that.
We are. That's horrible. We shouldn't do that. So dollar cost averaging is what our industry refers to of doing something on a routine basis over time. Example, you're employed or you have an IRA and you're going to deposit into your IRA $100 every month. On the first of the month, you're going to put in $100.
That's the automatic thing out of your payroll or even out of your checkbook if you're doing it in a non-IRA account.
Exactly.
It's the first of the month, the 15th of the month, usually the day after payday. We do it rain or shine.
And if you are employed, oftentimes it's done in your retirement plan at work. It's pulled out of your payroll and you've raised your hand, signed the form and said, I want to do 2, 3, 4, 5% of my payroll contributed into the 401k on payday. So that's your dollar cost averaging, a fixed amount on the same day every month over time. That's dollar cost averaging. And what people don't realize is, now, don't get me wrong, that is a good strategy. If you're employed and that's the vehicle you have for saving your money, you should be maxing that out as far as your budget can, especially if your employer has a match. So I'm not saying it's a bad thing. Please don't misconstrue my words. Dollar cost averaging is a good thing. But when you have the opportunity to turn that calculation of dollar cost averaging up a little, and we call that strategic cost averaging, you have a much better way of deploying a same kind of a algorithm or formula to your benefit. So strategic cost averaging is buying the companies not over time on the same day of the month, but buying them on the dips, buying them when the market pulls back, and the market will. And, we always tell our clients, be prepared for a 10, 20% pullback at any time. You don't know you turn on the CNBC, the news every day, and everybody's scared to death and panicking. Be prepared for the pullback. But when the pullback comes, we want to buy more of the companies that we want to own in the portfolio. When the companies go back up in price, we may not buy them for several months because they're not on sale. We want to buy things when they're on sale. So the strategic cost averaging really helps us do that. And last I checked, we don't have a crystal ball, do we?
No, mine went out for repair and never came back. I don't know what happened.
Nobody in this business has a crystal ball. And in my opinion, no one in this business has an algorithm or any chart that can tell them where the market's going to go. So the best thing we can do is on the pullbacks, we do what's called strategic cost averaging into the companies that we want to own. And we may do it over a week while we don't know when the bottom is. We may get it for $20 and the next day it goes down to 18. We may buy a little more. Next day it might go down to 16. We may buy a little more. Might start moving back up and we may buy that company all the way up to $22, $24. At the end of the day, we don't know where the bottom is. Well, inversely, when we decide we want to exit one of our companies, we also deploy the strategic cost averaging when we sell a company because we don't know where the top is. Last thing we want to do is sell it at $100 and have it go to 102 the next day. So we may take some time to strategic cost average out of a holding in our portfolio as well. So I hope that helps.
That definitely clarifies it for me. So as we're talking about these portfolios, where do we get our ideas from? Are we looking? Well, I know where we're looking. We're a global manager, so we're looking both inside the U.S. and outside the U.S.
Well, I can't think that anyone would disagree with us that we're in a global world economy at this point, right?
Oh, without a doubt. I mean, most companies, they could be U.S. based, but they do a lot of business outside the U.S. And on the reverse, they could be a European based company that does a lot of business in the U.S.
Right. So people ask me all the time, well, give me a definition of, how would I put Nepsis in a box? What box would I put them in? I would have to classify Nepsis as an all-cap global value investor. So, that's a big box. So
it is a big box.
The emphasis is on value. So we're looking for value over, just the plain growth. And, that can get into a long, drawn-out, answer. But at the end of the day, we're agnostic to where the company is globally. We're agnostic to the size of the company. We're an all-cap global value. This economy, the money moves at too rapid of a pace for us to say, we're only stuck in one little geographic box, and that's not the way we are today. So, those things relate back to how you put the whole portfolio together. Know what you own and why you own it. We have a lot of examples that we can talk about, and a lot of these companies, great. One of the companies we do own is Visa. And that's a global company. The Visa transaction, you see commercials on television all the time. Visa is a worldwide global company, and that's one of the companies that we own. Not recommending to buy or sell it. Listen to the disclosure here, but, Visa is a great example. So, you want to talk to us more. You want to get an opportunity to meet us and begin to work with us. We got a workshop coming up tomorrow night, Joni.
We got a tax workshop tomorrow night at 5:30 with Lindy Wickerson, from Venice. And it'll be from 5:30 to 6:30 at our offices, 6230 University Parkway, right at the corner of I-75 and University Parkway. So give us a call at 361-1484 or go to the website, www.journeyswithjoni.com.
One of the coolest things I see, Joni, is the opportunity that people get to work with two female professionals. It's really cool. It's not that uncommon, but, then again, it's not that common. So, folks, come and join us. We're going to have a lot of fun. We have a lot of fun here on this show. We're going to have all kind of cool topics. You're tuned into a financial show, and we're not talking about all these algorithmic things, but our goal is to really inform and educate our clients and have a whole different experience. So come join us. Have a lot of fun. I know they're yelling at us in the window there, Joni, so take us out of here. Give us a number one more time.
Give us a call at 941-361-1484. Journeys with Joni will be back next week. Until then, thanks for listening.
This program is for informational and educational purposes only. This program is not a solicitation or recommendation for any investment or security. Investments or securities mentioned in this show may or may not be owned by Nepsis Advisor Services. Nepsis Advisor Services is an SEC-registered investment advisor. Tune in to Sunny 1320 and 1450 Wednesdays at 11:30 to Journeys with Joni. You'll learn more about the financial decisions we make every day and how we can gain financial clarity in our lives. So join Joni Rametta Wednesdays at 11:30 here on Sunny.